Medical debt is a major issue for a lot of Americans. In fact, 22,000 more people each year would be able to qualify for home ownership if they didn't have medical collections on their credit reports. What if I told you that a new rule just came out from the CFPB, that's the Consumer Financial Protection Bureau, that could change everything? Medical debt will no longer stand in the way of future home ownership. That's right. The CFPB's latest regulation is set to eliminate $49 billion in medical debt for millions of credit reports. In today's video, we're breaking down how this change could make all the difference for you and why this could be a turning point to a path of home ownership. So exactly what is this new rule? So the CFPB amended what's called Regulation V, which enforces the Fair Credit Reporting Act. Now this regulation prohibits credit reporting companies from including medical debt in the reports they provide to lenders. This means that lenders will no longer consider medical debt when making decisions about whether to give you a loan or not. So it is a significant impact for everybody. Now, this rule takes in effect in 60 days after it's been officially published in the Federal Register, which is January 7th, 2025. So if you're dealing with medical debt on your credit report, this can be a game changer for you in a couple of months. Now, the CFPB also estimates that this rule is going to eliminate $49 billion in medical debt, and it's also going to eliminate the debt of about the medical collections from about 15 million Americans. So now with this massive removal of medical debt, millions of people will likely see their credit increase by an average of 20%. Now, that's what has kind of been the general pulse of that. Now, personally, I think it's going to be much higher. And the reason for that is, when we look at people's credit reports, typically we see medical collections as something that's isolated, right? They have really good credit. They went out, they needed something medical. It was done inaccurate. Or like they got a medical collection that wasn't supposed to be there. But then, the collection agencies leveraged the credit reports to get people to pay. This is kind of like the same story, the sad story for a lot of people. So with this rule, they're going to remove that. So I think that people are going to see upwards of 100 points, especially if medical collections are really the only thing that is negative on your credit report. Now, so for those applying for mortgages, they can see a significant change. But again, it's going to take a little bit of time to do that. Now, with this additional 22,000 more people being able to apply for credit is also a game changer for the industry. And, as of right now, at the time of this video, we are definitely in a high demand and low supply environment. Now, adding 22,000 more people to that mix year over year, I think is going to be an interesting dynamic to see how this impact is going to play out. But it's definitely worth noting so you can get approved and get into your dream home. Now, the other part of this is that consumer advocacy groups have been praising this rule, saying that medical debt shouldn't affect a person's ability to access credit. And groups like the National Consumer Law Group Center have argued that medical debt is an unfair factor in credit scoring because it often arises from situations that are beyond the person's control, which is typically how all this works. And then also, if you served in the military, you may have gotten out waiting for VA disability and you needed care, so you went and got it, but now you could have this medical issue. Again, this is a big reason why they're doing this, to help everybody out. Now, however, not everyone likes these changes, including some lawmakers, which have criticized the rule, saying it might reduce access to credit and pose risks for lenders and medical providers, calling for more comprehensive solutions to the underlying issues and medical debt. Now, while this is a huge step forward for everyone, there's a couple things that you guys need to keep in mind. First, the rule doesn't apply to medical debt on credit cards, whether those are regular credit cards or specialized credit cards. So if you're using a credit card to pay for medical expenses, that debt may still appear on your credit report. Additionally, the rule doesn't impact credit reports used for non non-lending purposes, such as employment or landlords checking your credit. So medical debt can still show up in those situations. Now, from a lender's perspective, this change means they can't factor in medical debt into the decision-making process for mortgages and other loans. While that's great news for consumers, this could still persist a challenge for lenders who are trying to assess risk more accurately. But again, medical is not really something that is even factored. I still think in today's review of someone's finances, but it does have a big impact on the credit report. And that's why I think these changes are so important. Now, for medical providers, this could reduce the financial pressure of having to deal with debt collection efforts that are tied to medical bills. They may be inaccurate or disputed. Debt collectors will also no longer be able to use credit reports to coerce people into paying bills they may not even own. And to wrap this up, this rule could be a major boost for many Americans who are struggling with medical debt by eliminating that debt from credit reports. The CFPB is aiming to help people improve their credit scores and in turn gain access to mortgages and other types of credit reports. However, there are still some areas of concern and debate, particularly around medical debt on credit cards and non-lending credit cards. But overall, this change can open up opportunities for home ownership and better financial help. So hopefully you guys found this video helpful. Please hit the like and subscribe button and drop any comments down below, especially if this new rule is going to help you. And I'll catch you guys soon.